Hi, everybody. This is Mike Bowler with the Denver Crypto Group. Along with Matt Mellon and Pete Chiodo, we're trying to bring some ongoing training to our members and to better understand the cryptocurrency blockchain space. This is going to be a quick introduction to a different technical analysis indicator that I pulled up regarding chart gaps. And this particular one regards the futures Chicago Mercantile Exchange futures contract. Why do I think it's important? Because I've identified 12 different instances in 2018 where there were gaps that were created. There are 4 different types, but we're just going to focus on the most common gap, or it's called a common gap. In addition to that, there's breakaway, runaway, and exhaustion. But I just want to show you how might in confluence with the other indicators that you might use, candlesticks, MACD, RSI, moving average, or Fibonacci's, to give you another portion of that confluence to hopefully, whether you're trading or just trying to protect your investment as a hodler, help you make some decisions on that. So let's get started real quick. If you want to have more questions, you can reach me at Mike at Denver Crypto Group. Also visit our website, denvercryptogroup.com. If you followed us on Telegram, you would have saw this last night, and you can also follow us on Twitter if you'd like. All right, let's get to it. So what we're looking at is TradingView.com's the Chicago Mercantile Exchange futures contract. We're looking at a 4-hour chart, and it only shows up so far. What I've found is on a 4-hour chart. Here's the call letters, if you will, BTC1 exclamation point. So what we're looking at is essentially gaps occur. They occur when the price significantly changes from the close of one price bar or candlestick to the next with no trading taking place during those empty spaces. They can happen unexpectedly. There's a bunch of different reasons why they don't occur, but because they're unexpected, they can be used for analytical insight. And different gaps indicate trend may be starting, it may be accelerating or near its end. Anyway, it's not, the common gaps don't really provide significant analytical insight, and they're pretty regular occurrences. They happen all the time in the stock market, in the currency markets, any market that's not trading 24/7. That's why I'm looking at the futures. When the futures were introduced in December 17th or 19th of 2017, so literally marked the top of the Bitcoin market. And I thought it'd be worthwhile to go back and look and see what type of similarities or what we might be able to gain by looking at the futures market to help us with the crypto markets. So essentially what happened here, and they happen a lot on weekends because the futures markets aren't open all day as well as all weekend. When we closed on this last Friday, on 6/1, the price was roughly about 74.64. When they reopened, you can see that this gap exists where the arrows are to about 76.78. I pointed it out last night. I think it was 75, 75.50 or so. But what we can expect that at some point in the very near future, typically with common gaps, they'll be closed. Maybe within a day, maybe within the same session, but certainly unless it's incredibly high volume, because this doesn't need to have that, there's an awfully good chance that they're going to at least close that gap without going significantly higher or lower. But if they do, maybe give you an opportunity for a trade. So that's the first one. Let's take a look at the next one. As I mentioned, there's been 12 of them, and that was on the weekend of May 18th with the price at 82.83. So where are we here? May 18th. Let's go find it. All right, May 18th. Here we are again. As you can see, price closed on Friday afternoon. It was roughly 82.76, more or less. When it reopened, you can see that it was a low anyway of 84.22. So this entire area was going to need to be filled again. Not only that, but you can see the tremendous wick up here. It could have been as high as 86.75. I don't know. To me, $400 roughly, or $350 from 82.83 up here all the way to the top of that wick. that's significant. So what do we see going forward from there? Sure enough, came down and closed that by the, actually they closed it right here, and that would have been on the 21st, which the 18th started it, closed it again on that Monday. Let's go take a look at the next one. And that would be on 4/27th, which was kind of interesting at approximately 92.91 price. Let's scroll up here. 92.91, what'd I say? 4/27. Let's go take a quick peek at it. Here we are. Another. Can it help? It closed 4/27 on a weekend, roughly 92.83. Reopens. It opened here on the low, 93.78. If it had gone up, which it did, to a high of 94.91, if your other technical analysis indicators said, this might be a decent place for a shorter, we ought to consider it, there was an awful good chance that we were going to close that thing, and certainly we did, based on the 30th. So opened up on the weekend into Friday, and 27th, closed it on Monday. But it was an opportunity. All right, let's take a look at another one on 4/6. Actually, there's a couple of them, I believe, here. 4/6 was 66.75. So we had some pretty good volatility going. But this doesn't necessarily mean that it's going to be super volatile. So let's take a look. Look at this gap. All right, here we are. Actually, this is 4/20. And it went from, 85.56. And again, that's a weekend. Sorry. And reopened up. It opened up much higher. Let's take a look at that. Approximately 89.11. So we did roughly about 350, 400 different points. How long did it take that one to fill? Let's take a look at this real quick. So this was on 4/22 when it reopened on Monday. We went sky high. Look at this. It goes all the way up to 96.66. Is that gap going to fill? Don't know. Is it going to fill? Yeah, it did, but it didn't fill. Actually, it kept going. It didn't. It came down to 86.70, but did not fill. Went back up again, created another gap on 4/27, which was the weekend. I think I might already just mentioned that. Had a lot of volatility, a lot of moving around. How long did it take that thing to fill? Right here on 4/20. Now let's take a look. It took all the way until, let's see, where's that 4/21? 85.56. So roughly about on May 11th. So it actually took a couple of weeks. So it's pretty interesting. We'll look at one more. On March 26th, it was 79.65. So let's go down to 79.65, get an idea on this, then we'll go over to March. Again, these are all just additional indicators you could or couldn't use, as you can see right here. On actually, it's 3/27. There were a couple of different gaps coming up here, and we'll show you those also. But it went from 78.49. There's a gap here. Went a lot higher. If you'd have considered a short, the candlestick's pointing it at, some other stuff. It took until, what's that say? March 28th. It closed that gap. Right prior to that, we had 2 days in a row. One of them was March 26th, which I think I mentioned on a Friday. Let's see, where'd that go to? Yeah, roughly the gap was right here, up at 8,100. It gapped down again on the next 4-hour chart. So things were moving around a little bit. Market goes down, closes this gap, went all the way down to here. If you're looking at both of them at 78.28, had to retrace all the way back up to 81.32. Sometimes these are a couple hundred points, sometimes there's not. There are numerous other ones, as I had mentioned, that go all the way back to, in particular, January 9th. They really didn't go into December. Most all of them are on the weekends, although January 9th was on a Tuesday, February 13th, Tuesday. February 20th is also on a Tuesday, 3/26 on a Monday. But typically, these things are going to get filled. Can they be helpful? Absolutely. If you plan on being active in the market, regardless of whether you're a day trader or not, it just gives you another reason to keep an eye on it. I'm going to close this thing up. Again, I'm Mike Buller with the Denver Crypto Group. You can reach out to myself at denvercryptogroup.com or Matt Mellon or Pete Chiodo and get as much information as you like. We hope this is helpful. I just wanted to show you something that, as far as I know, I haven't seen anybody else pointing these things out in terms of the gaps with the futures. So we hope you have a good one. Hope you can join us. If you would like to attend a trading class, our next one is June 16th. It's at the Innovation Pavilion at 9200 East Mineral. I believe it's Centennial, Colorado. And it goes from 1 to 5. We go into a lot more depth about all the indicators. If not, reach out to me. Thanks. We'll talk to you later.